Recording in progress.
All right, so good morning, and I trust you are doing well. So we've been taking the standards one by one, and this morning I want to look at IAS 41, which talks about agriculture. All right, it's a very unpopular standard. It hasn't been tested before in ICAG, but in ACC exams, it does happen. So it has been tested over there. So who knows, maybe for the first time in your sitting, that is the time that is coming. So you have to get prepared. So we're looking at IAS 41, and it's about agriculture. Agriculture. Now, the standard agriculture, when you talk about agriculture, it looks at three major things. These are only three things that it focuses on. So we're going to take them one by one and break them and look at the details of it one by one. All right, so the first bit that we want to look at, when we talk about IAS 41, we are looking at these things. So the definition embodies these three things. One, we have a biological asset. Two, we have what we call government grant. So I know you've heard of government grant before in IAS 20, but here, when the grant is given in respect of agriculture, is treated differently. All right, so we have government grants. Then we have what we call agricultural produce. Agricultural produce. Now, so we need to understand what these things are. But the agricultural produce, our focus will be agricultural produce at the point of harvest. So this one is at the point of harvest, because beyond the point of harvest, it is no more under IAS 41. It will be under IAS 2 inventory. All right. So that is that. So you need to be very, very careful. So now when we talk about the biological asset, a biological asset simply means a living plant or animal. All right. A living plant or animal. So that's a biological asset, a living plant or animal. All right, then, like I said, when we talk about the agricultural produce, we are talking about the product, the harvested product, a detachment of, let's say if it is a maize, when you are pulling the maize out of the maize tree, all right, or the maize plant. So that is what it is. So whilst the biological asset is a living plant or animal, when we talk about the agricultural produce, we are talking about the harvested products of a biological asset, the harvested products of a biological asset. All right, so that is that. When we say harvest, harvest simply means a detachment. Okay, so you are detaching the produce from the biological asset. Detachment of the product from the asset. All right, so that is what it means to harvest it. For example, let's pick an example. Let me use this example. If you have a farmer, and that farmer buys a dairy calf, all right? I hope you know a calf. A calf is a young cow, all right? So if he buys a calf, then that calf is a biological asset at this point. Biological asset. So that is it. The calf is a biological asset because what? It's a living plant or what? An animal. All right. Now we all know that the calf will grow. Calf now grows into or matures into what? a cow, a matured cow. All right. This type of growth, we call it a biological what? Transformation. Biological transformation. When we say a living plant or animal, the scientist is saying that human beings, we are also living animals. So should we start looking at ourselves as biological assets? That's another discussion on its own. All right. So we call that kind of growth what? Biological transformation. Now, what happens is that the cow or the calf that has become a cow, that cow now produces milk. All right. So the farmer now makes the milk from the cow. That farmer milking from the cow, that milk that he is taking out of the cow, detaching it from the cow, is the milk has now been what is being harvested, and the milk is what? Agriculture produce. So milk is being detached, i.e., it's what? Harvested. Okay. And the milk, therefore, is what? Agriculture produce. Now, listen carefully, because this agriculture produce is only treated as agricultural produce at the day the harvesting is done. So if I milk everything, then it means that it is at the date of harvest. Today I've milked it. It's called agricultural produce. Now, if I now transfer it to my warehouse, where people will come in to be buying and you'll be selling, it becomes your trading activity. And therefore, at that point, you are what? Trading it. It's no more an agricultural produce. It is now what? Inventory you are selling. So be very, very careful about that. All right. So that is that. So therefore, let's look at how we look at these things in terms of accounting and the figures. All right. So we had three things, right? We had a biological asset. Then we spoke about agricultural produce. And we also spoke about government grants. All right. Now, what is going to happen? We need to learn initial recognitions. We need to learn what measurement, initial measurement, and what subsequent measurement. So therefore, we start with recognition. Of course, like I always say, here it is an asset. And so therefore, we know a standing recognition criteria, which is what? Probable inflow of economic benefit to the entity. Then what else do we need? Remember, cost should be measured reliably, or fair value in this case is what? Reliably measured. All right. We add another one, which is of course embedded in these two already. It says that the entity must control the assets. The entity controls the assets. Of course, these days when the conceptual framework got changed, you realize that this probable inflow cannot flow to you if you are not in control of the asset. All right, so that kind of thing is there. All right, then we learn the measurement. Here, the initial measurement is at fair value. All right, so initial measurement is at fair value. It's at fair value less cost to sell. What you used to know as net realizable value, right? All right. And if there is a change in the fair value during the period, you will consider the gain or loss on the fair value to what? SPL. All right. So that is that. When there is what? A change in fair value. If there is any change in fair value. All right. We will look at the figure so you will see what we are talking about here. Then subsequent measurement, the standard says that you need to measure the thing using the fair value at the reporting date again. So find out the fair value at the reporting date. So in the subsequent measurement, you will have to look for the fair value at the reporting date in the question, and you will fair value it. So you keep it at the fair value, all right, less cost to sell, at the reporting date. Very, very important. At the reporting date. So that if there is change in fair value, any gain or loss will go to where? The SPL. All right, so statement of profit or loss. Again, what you should also know is that in terms of the agriculture produce, the initial measurement at the date of harvest, you also be measuring it at fair value less estimated cost to sell, so that any change in fair value, you get your gain or loss and it will go to where? The SPL. All right. Subsequently, after the harvest date, here, after the harvest date, don't forget what we said. After harvest, that thing now is treated as what? IAS2. So after harvest date, IAS2 what? Applies. So you have the lecture on IAS2 already with you. All right. So that is what you need to take care of. All right, so now let's look at the government grant aspect. So here we are talking about grants, government grants in respect of what? Biological assets. So we are looking at grants that are related to biological assets. So if the thing is not for biological assets, please don't apply IAS 41. Go and apply on IAS 20. All right, so that is that. Now, how do we treat this? Of course, here what happens is that if the grant is unconditional, so we have unconditional grant. If the grant is unconditional, then what the entity will do is that the entity will now record the grant as an income, all right, when the grant becomes what? Receivable, all right. So what do? Record grant income when grants become receivable. When the grant is conditional or conditional grants, how will we treat it? We will record as income, grant income, only when we are able to fulfill the condition. When condition related to the grant is fulfilled. All right. So that is that. So how much are you going to record? You are going to record the fair value. All right. You measure the grant at fair value. All right. So that is that. So here you measure it at fair value. All right. So you record the amount. All right. So that is the same thing. This side you record it at what? Fair value. All right. If there is anything you have to incur before you can receive the grant, then it means that you have to net it off. All right. So that is that fair value less cost to sell or whatever less cost to receive the grant. All right. So a net off is allowed. I mean, we learned something like that in IAS 20. All right. So that is that. Be careful and know that IAS 41 doesn't apply to intangible assets. Be very, very careful. It doesn't apply to intangible assets. Sometimes your examiner brings some question, and the way they do it is that they'll bring you a question and quote a standard for it, but you realize that the standard doesn't apply to the question that they have given you, and they are just trying to trick you. All right. So just because of that, let me just mention that IAS 41 doesn't apply to IAS 38 intangible asset. And it also doesn't apply to land PPE. It doesn't. It doesn't apply to land. So if you have a forest on a land, having some biological assets on a land, then it means that you have to separate the land from the biological assets you have. Let's say I'm using a land to rear a cow or calf. The land will be separated from the biological asset calf, because the way we used to understand PPE as land and building, putting them together, land and the biological asset can't be together. So it means that you have to separate it. All right. I'll give you a note on that when I'm about to end the class. So please take note of that. Now, let me stay a little longer on the concept of fair value. All right, we have done IFRS 13, and so you should also know all about all these fair value, because everything you see here is fair value, fair value, fair value, fair value, fair value. All right, so you will know that per what we've learned in IFRS 13, whenever we talk of a fair value, then it means that there has to be what? An active market. All right, so those are the things. There has to be an active market. So it means that whatever you are doing, you have to look for an active market in terms of knowing the fair value. And that one is guided by what? IFRS 13. So all these fair value that you see in here, fair value, less cost to sell, fair value, all those things. Please be mindful. Be mindful that for fair value, you will need what? An active market. And we've learned what an active market is under IFRS 13. So can revisit those videos and understand more into that. Now, what if there is no active market? If there is no active market, then what do? We will have to do some estimate. So the standard says that if there is no active market for an asset, then it may be possible to estimate the fair value, and you have to use, you remember what we learned? Estimating fair value. We did all those things. So if there is no fair value here, what you do is that you use the most recent market price. The most recent market price. All right. You use the most recent market price. All right. So that is that. So we said that sometimes it contains some assumptions. All right. So you have to assume certain things. But if you don't have the real fair value, it means that you can use the most recent market price. And also, you can also use the market price for similar assets. I think you should know what that thing means if you have watched the video on IFRS 13. All right. That is what level 2. Yes, fair value. So the market price of a similar market or a similar asset. Sorry, similar asset. All right. You can also use the discounted cash flow, the DCF, discounted cash flow from the asset. Which one is that? Which one is that? I know you should know that. Level 3, what is VIU? All right, VIU, value in use. Or you can look for the NRV, the net realizable value. So I know all these things are things you know already. All right, so please be careful. Be careful. All right, so these are things you are supposed to know. But I'm going to stay a little longer in terms of the biological asset because there's a trick in there. There's a little bit trick in there. Now, you see that we said that fair value, when there is a change, you recognize the gain or loss in the SPL. Now, there's something about a biological asset you need to know. You need to be very, very careful. All right. Understand that it is a biological asset. Now, how does the fair value changes? How does it change? Now, the fair value of a biological asset may change because of two reasons. Two reasons. Fair value of biological assets may change. There are two ways it can change. Number one is age. Buy a calf. The price of that calf at the time you buy it or you bought it is very low because it's a young calf. Let the calf grow, okay, to be a year older, 2 years older. Go to the market and see if you can, get the same value for that animal. It won't happen. It won't happen. So whilst the animal is aging, you realize that, you see, the selling price also changes. And so therefore, there can be a fair value change. Number two, and even aside the age, there is also a gain when there is a new biological asset born. So age, and let me add age and what? Birth. Age and birth. Yes. Because if they give birth, be careful, their value is increasing. Then another reason is the prices in the market, general price increase in the market. All right, because it happens. If pepper is increasing, then a cow too. If demand is exceeding supply, I learned that some aspect of our traditional marriage, you may have to buy one of these animals. And so if people are getting married and they are buying more, it means that the price will go up. So general price increase, all right, in the market. All right, so these are the two ways the fair value will change. So be careful. Check it in the question. Check, has the animal aged? Two, as it giving birth, there's a likelihood that there will be a fair value change. They can give birth before the reporting date comes. Because at the reporting date, it's automatic that you need to use the fair value at the reporting date. But they can give birth before the end of the reporting date. So be very, very careful when you are answering these questions. Be very, 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 very careful. All right. So that is that. Okay. So let's do some little. If you have a sheep, is a sheep a biological asset? Yeah, it's a biological asset. Except it's a bearer plant. I'll look at a bearer plant for you. A bearer plant is treated under IAS 16. We've done that. But because we are doing something biological, plant, animal, I'll mention that one too. All right. So you have a sheep. Okay. And sheep gives us what? Wool. So the agricultural produce will be what? Wool. The wool at the point of harvest. All right. It will be. So what I'm trying to give. This is, nobody is going to ask you these things, but just know one or two. Like I use the calf. Here you can have a sheep, and the sheep will give us wool. So the biological produce, don't forget, is at the point of harvest. Don't forget. Don't forget. All right. So that is that. It's at the point of harvest. Okay. So basically that is that. Now, I think we have enough knowledge about this. And I've said that the scope of IAS 41 doesn't include IAS intangible, IAS 38, and IAS 16, the land that we are even using to process the or rear the animal or harvest the plant. All right. So please be careful about that. All right. Be careful about that. All right. So now how do you present these things in our financial statement? The presentation of this thing in our financial statement. Of course, the biological assets are presented separately in the SOFP, but it is part of the NCA, all right? So take note of that. In terms of presentation, how you present it in the financial statement, you have to present it what separately. So biological assets are presented separately. On the SOFP within the NCA. All right. So that is that. That is that. Of course, there are disclosures. And if in any case you can still not measure the fair value, find the fair value, please, you revert to the cost model. All right. And you know the cost model. All right. The cost model. All right. So basically that is that. But like I said, let me just give you one hint of we said that we made mention that land is not a biological asset. Intangible assets are also not biological assets. So if you have a forest, let's say a forest, you see a forest is a land with trees. So because land is not a biological asset, what you are going to do is that you are going to separate the forest into land and the trees. All right. And you value the land using what? IAS 16. And you value the trees using what? IAS 41. So that is that. You value them separately. So please be careful around that. And I said I'll give you something on a bearer plant. A bearer plant is treated under IAS 16 because we said IAS 16 is what? PPE. When you are looking at PPE, we are looking at PPE that is what? Used in the production of services, number one, or used to produce goods and services, number one, used for administrative purposes and what? Rental. Now, a bearer plant, all right, is a plant that is used in the supply of agricultural produce. So you see that the bearer plant is used in the production or supply of agricultural produce. So there is a thin line in there. There's a very thin line in there, agricultural produce. So you have to be very, very careful. You have to be very, very careful. All right. Now, again, not only that, it means that, and also the bearer plant is expected to bear fruit for more than one accounting period. Because IAS 16, you have to use the asset for more than one period. So it is used in the production of agricultural produce, and it is expected what? To bear fruit for more than one accounting period. All right, more than one period. And lastly, it is there is a remote likelihood that if it is being sold, what it basically says is that there is a remote likelihood that you will be selling the agriculture, the bearer plant, all right, as an agricultural produce. So that plant itself is not like agricultural produce you can sell. So there is a remote likelihood that you will sell it as an agricultural produce. Likelihood that it will be sold, that the bearer plant will be sold as an agricultural produce. Unless unless you are selling it, it is being sold for scrap. For scrap value. So that's a bearer plant. We did all these things in IAS 16. So example of this type of things we are talking about is something like the vines. The vines. The tea bushes. I don't know if you know the tea bushes. The one that gives us the tea bag and all those ones. And any fruit trees. Any fruit trees. So be careful. There is that kind of thin line between these things. All right. And so if you have the tea bushes, the fruit trees, they may be classified as bearer plant and treated as a PPE rather than being accounted for as what? IAS 41. Those things you see there too are biological assets because they are living plants. All right. But if you see it for these things, that it meets these things, then please, you will have to treat it under what? IAS 16. All right, so that is that. As for disclosures, you can just describe each of the group of the biological assets, the method that you use for valuation, and any reconciliation between the carrying amount at the beginning and the carrying amount at the end, i.e. the fair value at the beginning, the fair value at the end. So basically, that is that. Let's see how the figures work. So let's try and look at some questions. All right. Just a quick one. All right, so we have this question to deal with. I mean, about 2 questions. We'll look at them, then we go. All right, so let's try and break these questions down and get some solutions to them. So the first question says that there's a herd of 5-year-old animals. They are 5-year-old animals. These are animals. They are a herd of 5 4-year-old animals. So they are 5, but they are 4 years. So how do we go around this? So we have 5 4-year-old animals. So we have, the number is 5. And they are held at January 1, 2013. But in July, a 4.5-year-old was bought at 212. And we've been given the fair value. So it means that those 5 that we have here, the fair value for them as at that date for 4-year-olds is what? 200 cedis. So it means basically we have how much? 1,000. You are correct. All right. Then we are told that they bought another one. But like I told you, the fair value of these animals changes with age. All right. So if these 5 were 4.4 years old, by July, so this one is the 01/01/2013. By July 1, 2013, what is happening is that the 5 that we had, their age they are now 4.5 years, and so therefore those 5 will now be priced at what? All right, so how much do we have? 212 by 1060. So 1060 therefore tells us that there has been a change in what? Fair value. So there's a 60 that will go to the SPL. So be careful, they are aging. And the question also said on that same day they bought another one whose price was what? 12,212. Very, very tricky, but you have to be patient. All right, so we have 212. So it means that by the end of July, how much do we have for these animals? We have 6 animals, and they are what? 1,272. All right, so that is that. That's it. Then at the end of the year, we are told that we must what? Revalue all of them at the fair value. All right, so that is that. Okay, so we are told that the 5-year-old, all 5-year-old, at this point they are 4 years. Here they are all 4.5 years. At the end, which is the end of the period, 31st December, they will all be, including the one that was bought, who was 4.5 years old, will also be 5 years. All right, so you see at the end we have 6 animals, and the price of all 5-year-old is what? 230. Ghana cedis. So what do we have? 230 by 6 animals. That gives me 1380, telling me that there is another change in fair value. So what has happened? 1272. That gives me 108. All right, which will also go to the SPL. So in the same year, the total amount going to the SPL is what? 168. And the amount going to my balance sheet is what? This one, my closing balance. So that is that. That's how simple it is. All right. Okay. But be careful. The examiner can always add some tricks to it. Now let's look at this question, which is on Akate Farms. Akate Farms. So Akate Farms is a popular name in Ghana here. So we have Akate Farms. So the question 2, Akate Farms operates a dairy. On January 2011, he owns 100 cows. So we know that he owns 100 cows on January. The worth of the 100 cows is 1,000 each. Okay. So 1,000 each. That's the price in the local market. And they say at December, he owns now 105, and they are now priced at 1,001. During 2011, he sold 40,000 gallons of milk. All right. So this one should tell you that milk is an agricultural produce. All right. So this is being sold, therefore, it now takes the form of an inventory because it has passed the date of harvest. So it's inventory you are selling for 5 gallons, 5 cedi a gallon. When cows are sold at on the local market or at the local market, the auctioneer charges 4%. Okay, that is it. Therefore, how do we need to go around this? We were told that we always should measure the thing at fair value less what? Cost to sell. Now, when cows are sold, it is not when milk are sold. When cows are sold, these are the cows' worth. So we are looking at fair value less cost to sell. What is fair value? The price at which you exchange an asset for a consideration between two knowledgeable market participants at a measurement date. So we assume a sale. And now, if that is the case, then it means that here we will have how much? We have 100 multiplying 1,000. That gives me 100,000. But we are told that there is always a 4% discount charge. 4% discount, that is always charged. So you can either multiply this thing by 0.96 or you can do the 4% discount on that. So if you do the 4% discount, it is 4,000, meaning that here will give us a net of 96,000. So that is that. Then in December, we are told always that we need to revalue. I told you, if the person owns 100, now he owns 5, how does it happen? Means that probably bought or probably to give birth or whatever you can call it. All right. Now you are going to multiply the 105 by what? 1,100. 1,100. Because we are not told that they bought a new one, which we need to sell. Even if they bought, that is still the closing balance. And how much is that? We have 105 multiplying 1,100. How much do we have? 115,500. 4% discount on each. So what is the discount on that? 0.4 gives me 42. No, it's supposed to be 0.04. 115,500. Try 0.04 because 4%. That gives me 4620. And so therefore, how much do I have? I have something like 115500 minus that. That gives me 110880. So that's my closing balance because that's the reporting value. All right, but there has been a change. What will be that change? So this one is going to my SOFP, presented separately on the as part of NCA. Then what is my change? My change now is 96,000. Compared, that gives me 14,880, and this is going to my SPL. Don't forget, that's not the only thing going to SPL. What happens? They sold 40 gallons at the price of 5 each, and that is 200,000 Ghana cedis. There is no discount in that because the discount will refer to only what? Cows. All right. So be very, very careful. All right. So that is that. There are other questions. So I advise that you try and get this manual. All right. Try and get the manual. Try as much as possible and get the manual. And you get many questions to practice. All right. This is a very interesting question. I think there is another one. Yeah. So I think these are the questions. So this is the last one. All right. So I would prefer that you try and get the manual. And of course, the solution is provided. All right. So have a great day. All the best. So these are the ones that we did. Cool, calm, collected. All right. So that is that. All right. So try and get the manual. If you want to know how you can get it, you can just pick up this number. All right. Just pick up the number here. Because the one that we did is also this one. All right. Pick up the number and let's have a chat. All that yours. Have a great day. So I expect you have more encounters. So follow the channel, try and subscribe. Very, very important. All right. So that you get all the standards that are uploaded at any point in time. God bless you. Have a fantastic day. Bye-bye.